Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bawulski. There is no major Eurozone data in the first half of the day, and Spain's unemployment figures are unlikely to have a significant impact on the euro. If EURUSD continues to decline, especially on weak data, the first area to watch for buyers is the 1.1700 support level. You would only consider long positions after a false breakout there, targeting a move towards 1727, formed at yesterday's close. A breakout and retest of this level would confirm bullish momentum and open the way towards 1753. The final upside target stands at 1773, where you would take profit. If the pair keeps falling and shows no activity around 1700, downside pressure will likely increase. In that case, sellers may push the price towards 1673. Only a false breakout there would justify long positions. Alternatively, you would consider buying on a rebound from 1645, targeting an intraday move of 30-35 pips. Sellers remain in control, taking advantage of worsening sentiment driven by the situation in the Middle East. And the euro attempts a modest recovery in the first half of the day. The first bearish reaction is expected around 1.1727. A false breakout there would provide a short entry, targeting a move down to 1.1700. A breakout and consolidation below this level, followed by a retest from below, would open the way for a deeper decline towards 1673. The final downside target stands at 1645, where you would take profit. If EURUSD continues to move higher and the bears show no activity around 1727, where the moving averages favor sellers, it is better to postpone short positions until the next resistance at 1753. You could only consider selling there after a failed breakout. Alternatively, you could plan to open short positions on the rebound from 1773. Targeting a 30-35 pip downward correction. Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents. You could plan to buy the pound today when the entry point reaches around 35.28. With the target at 1.3557. Around 35.57, you could plan to exit the long positions and open shorts in the opposite direction, expecting a movement of 30-35 pips. A strong rise in the pound can only be anticipated after good news from the Middle East. Before buying, make sure that the MACD indicator is above the zero mark, and just beginning an upward move from it. You could also plan to buy the pound today after the price tests 1.3508 twice in a row, while the MACD indicator is in an oversold area. This will limit the downward potential of the pair and lead to a market reversal upwards. A rise to the opposite levels of 35.28 and 35.57 can be expected. You could plan to sell the pound today after the 1.3508 level is updated, which will trigger a quick decline in the pair. The key target for sellers will be the 1.3486, where you could plan to exit the shorts and immediately buy in the opposite direction, expecting a 20-25 pip move from the level. Pressure on the pound may return at any moment. Before selling, make sure that the MACD indicator is below the zero mark and just beginning its downward movement. You could also plan to sell the pound today if the price tests 1.3528 twice in a row, when the MACD indicator is in an overbought area. This will limit the upward potential of the pair and lead to market reversal downwards. A decrease to the opposite levels of 1.3508 and 34.86 can be expected. That's all for today. See you online soon.